And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
And welcome to the party. Welcome to Financial Fitness Friday. I'm Rich Rosso, CFP, here with Matt Damon, CFP. No.
Good morning.
Matt Doyle. I always want to call him Matt Damon. I mean, it's just...
I always wanted to look like Matt Damon.
There's a resemblance. Yeah, you and I both look like Matt Damon. We're both men, anyway. This is as close as we come to Matt Damon. Lots of good movies with Matt Damon. Well, speaking of good, we have futures up 37 on the Dow, S&P 20, NASDAQ. NASDAQ up nicely, 85 points. So 10-year holding steady at 4.308%. So obviously today is the big day. It's the personal consumption expenditures price index day. Right, so that's the inflation measure the Federal Reserve puts all its money on. And it's expected to show very little, if any, monthly increase in May. So we'll be anxiously awaiting that number. Now, the one thing that we are seeing is that we are seeing a downshift absolutely in U.S. growth over the first half of the year. So these higher for longer rates are finally starting to move. And I think the biggest reason is that pandemic savings cushion that helped Americans is over. Right? So you look at the savings, those pandemic windfalls are done. Right? The incredible willingness to spend out of cash, increase credit card debt, it's been amazing, right? We have the healthy labor market played a role, but $2 trillion in excess savings that Americans accumulated during the COVID-19 pandemic. All gone.
Savings accounts are depleted.
Yes. And we know where credit card balances are. We have not seen credit card outstanding balances at this level. So we are seeing now that everything that, for the most part, Americans are doing are tied to their income. And if we look at real income growth, real wages, especially since 2020, every quintile when it comes to wages adjusted for inflation or income adjusted for inflation is down. So I've been telling Matt, I've been telling clients, it depends on who I talk to, what the economy looks like. If I'm a boomer with very little debt, my house is paid off, I invest in the market, hey, I'm loving life, right? All my assets have appreciated. If I'm a working class family with 2 kids trying to buy groceries every day, and not that those who have assets who have appreciated don't wince at inflation, it's just that you handle it. It's detrimental to the quintiles that are earning income and need that income to survive. So that is the tale of two parties. And I guess you see it in what we're seeing in a lot of store closures, like restaurant closures, like Red Lobster. Olive Garden sales down. So Olive Garden CEO comes out and says, we'll never raise prices. And like 2 days later, they're going to raise prices.
Yeah.
So this is the point where we should start to see an incredible deceleration in the PCE. So that's a very sensitive number that the market's going to pay attention to. And obviously, we're going to see a rate cut, at least we think, anyway, by the end of the year.
I mean, there's a lot of companies out there lowering expectations too.
Yes.
Nike did, Walgreens did.
Well, look at Nike. Their guidance was the softest, really, I have read in a long time. They're down 14% in the pre-market right now.
Right.
Right? So you have this higher odds of an AI boom, right? You have the allure. So I got this question on another radio station and a magazine the other day. Why is the real economy and the market economy so different? Well, first of all, they rarely align unless they're jolted to align through some form of exogenous event that's not expected. Therefore, yes, markets align, or a shocker number that is outside the perimeters of what the market feels comfortable with when it comes to the economic data. But for the most part, markets in the short term move by narratives and stories are communicated stronger than ever today. Listen, I have relatives who were stockbrokers in the 70s. They always, fascinated me. Talked to them a lot. And they would talk about stocks, and they would create stories. Now, I will tell you, they did their homework. So, Matt, you would appreciate this. Old school stockbrokers, they did their homework on these companies.
Sure.
My uncle had charts everywhere and all this kind of stuff. So it's not like they didn't do homework, but they had to get you excited about owning a particular company.
Right.
And they did it. So right now, the only way they communicated those stories were in person and over the phone. And now, gosh knows how many avenues we have for stories. So they drive markets. Markets move ahead before the economy does. Heck, during the Depression, people were living in Hoover towns, tent cities, and markets were up dramatically because of the interest rates. So I always think, someone asked me a question yesterday. Well, how would the debate move the market? And I'm like, what's the market's bet on who's might win the election coming up? And I said, well, I think you will probably see it in sector rotation more than anything else. Which sectors favor Biden versus which sectors favor Trump. That's where I think you'll see change and movement. But election years tend to be strong. But I think the overarching theme for this market is the consumer is finally starting to slow down. We need that labor force number to slow down.
And the consumer makes up what? 65% of GDP?
Of retirement, right, of spending.
Spending.
Right? So again, I've got my older boomers who are still spending because they have wealth. Right? You look at them taking cruises and airline trips and so forth. And families are hurting to do the same. What I don't know, Matt, is whoever becomes president, I don't know how they fix the inflation baked in the cake. And what I mean by that is you bought a birthday cake in 2019 and it was $20, and then this year it's $50. And now you see this trending down of inflation, right? So according to Wall Street, if that cake is $50 next year, there's no inflation. But how do I now take that price of that cake from 50 back down to 40 and 30? How do I analyze those input costs? Who's going to do that? And I think that's the bigger question. All right, we get back. We're going to have a lot of stuff to talk about. 10 steps to retirement, Social Security, all that stuff that keeps you awake in the morning, especially Lance. Lance, your eyes open? Don't use the S word, Lance. Don't use it. We'll be right back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
It's back. Get ready for our next live chat edition of Candid Coffee with Richard Rosso and John Penn, Saturday, June 29th. Anything you want to know, we'll find the answer.
What's going to happen to interest rates?
Should I put all my money in gold?
Has Lance been working out?
Register now and submit your probing questions for John and Rich at realinvestmentadvice.com.
How far will NVIDIA go?
What about Social Security?
Who does Mike Leibowitz's hair?
The live chat edition of Candid Coffee with Rosso and Penn. Register at realinvestmentadvice.com. Realinvestmentadvice.com.
Are those your pajamas?
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Lance says, I'm here, recovering from the debate last night. I have no idea what you just said. So he's thinking it's a continuation of the debate from last night because I've been mumbling all morning. But we're glad you're here, Mr. Roberts. Oh, and Peter, yeah, that's all we are. That's all they are. Excess savings. That's all we care about. Consumers are generally terrible with money. Okay? We had record savings. They blew through it, okay? Look at the financial crisis, how people took out home equity conversion mortgages to do what? Buy televisions, okay? Look at where the savings rate is today. Look at U.S. household debt at a record and more Americans falling behind on their credit card payments. Third of households that were surveyed in the Census Bureau recent survey, it was difficult to pay for usual household expenses in the week prior. Right. That's what we are as Americans. We are consumers.
And I think the new number is what, 45, 50% of, the average income is going out towards housing now, when it's supposed to be around 30% of your gross.
Exactly. If you look at the numbers that are, yes, generally speaking, 30, now it's 40 to 50% that is going to housing costs. So it's not a good situation. And I'm not saying inflation is really that historically high. It's just for how we have lived and how we have leveraged lower rates. This is the new norm. So being outside that norm, people have decided to blow the savings. Now, some of it needed it. Some people needed it to actually survive and keep a roof over their head. But for the most part, we make some very frivolous purchases. And that's okay. That's what keeps us going. That's what marks us. All right? But now people are rethinking it. When Olive Garden is hurting, that's a problem. So the funniest part of that Darden report was Olive Garden suffering, Ruth Chris actually doing better because they also own some of the higher end chains like Capital Grille. And that goes back to my thesis about older boomers who have stock wealth, who have housing wealth, and they're still spending. But that's going to come to an issue too. That is going to be an issue too. So again, the Fed is finally accomplishing what they want. I'm not saying it's right, but they do want to see spending slow down. But the market's wrapped up in this AI story that allegedly is going to add, huge productivity gains. 2.5% a year estimated for the rest of the decade, compared to 1.5% pace since 2005, which means you're also going to fire people. And the market likes that too. Now, I'm not saying it's right that the market likes that everybody goes out there and spends everything. I'm not saying it's right that the market goes out there and likes when companies fire people. But it is what it is. So.
Well, I mean, and to your point earlier about the inflation, right? Mm-hmm. I mean, ever since, Glass-Steagall was repealed in 99, banks don't necessarily operate the way they used to. So, this comment is kind of, antiquated. But at the same time, I remember learning, and again, I'm no economist and I don't really focus on evaluating stocks, but I remember learning that the only way to really, as a country, get rid of debt is to inflate your way out of debt. And we've been living off low interest rates, if you want to call it drunk on easy money for 20, 30 years.
That was a country song once.
Drunk on free money?
Easy money, yeah. No, I'm kidding.
Was there a train involved in that one?
There was a train, a dog. My wife ran away, yeah. What is it? Someone, yeah, the pickup truck, yeah.
But, I mean, I would expect at some point,
Go
that's why inflation, there's always a target. Inflation's never zero, and we don't want it to be negative. We don't want to have a deflationary environment necessarily, but there is a healthy level of inflation, and when it gets out of control, you gotta take steps to prevent that.
Right, absolutely. So the only thing you can do is to handle the household finances as well as you can, and people are cutting back, and they should. It would be, I was one of those jerks who thought when the savings rate catapulted during the pandemic that we would at least wake up and go, oh my gosh, I really should save for a rainy day. I was like, okay, this is going to be like the Depression era mindset. And people are the switch has gone off in their heads, and they're actually going to keep saving more money, and they're going to be smarter. I was absolutely 1,000% incorrect. It went the opposite way.
Right.
It was fear of missing out. I got to do stuff before, the whole world ends. Climate change is going to take us out in 6 years, according to Greta. She wrote that 7 years ago. I'm still here. So those are the things we have to keep in mind. But hey, if you're in the market, you're loving life, right? 31 number of record days closing highs. Record high days, 31 so far this year. None in 2023 for the S&P 500. 70 in 2021. So yeah, the one thing I think that Biden had done well is not fall for the stock market narrative, because I think 93% of the households, wealthy households, own most of the stocks, right? So the stock market is not indicative. I see the meme go around where is, well, look what Biden's doing for the stock market. And I'm like, you know what? You may be focusing on that, but they're not. And they shouldn't be.
Sure.
That's the one thing I didn't really like when Trump would do that, is like, listen, a lot of people don't invest in stocks. Yes, they have defined contribution plans. We understand how people invest indirectly, but they don't really care much about that compared to their costs every day to survive. It's just not their focus.
What does bread cost? What does it cost to fill up my car?
Right.
Yeah.
Those are the kinds of things that count. So you also, if you're retired, right, you have to look at the kinds of decisions that you're making with Social Security. Any kind of guaranteed income that you have in your household is going to be important. And there's always this adage that, listen, I have to take social. Listen, I work with a client who he's great. They are both great. And they are both very, very data driven. But when it comes to Social Security, they're very emotional. So we run the numbers for them, tell them that this is how they need to claim. Wait until the age of 70, delay your benefit. And he doesn't want to. And he explains to me that he doesn't want to because he has an emotional problem with it. He just can't do it. Now, I give him credit for actually revealing that to me, because he is very analytical when it comes to many other areas of his life. And his plan is really very, very successful plan. But when it comes to Social Security, people make emotional decisions all the time, because it's going to run out. It's not going to be here. There's this story, I think, and this is a narrative because I can't find anything that says it's true, that if I start taking Social Security now, even before full retirement age, that if there is a cut, that I am not going to be affected. Like all of a sudden the government is going to say, no, Matt, you take it. You know, you're special.
Right.
We're going to cut it for people who haven't yet, but not you. I haven't seen that anywhere. I haven't seen anything that says that just because I've been taking Social Security, that I will not face a cut. Like I am somewhat in this protective bubble and nothing is going to happen to me. And this narrative is very strong because I cannot find any evidence that that would be the case. The government will do whatever the heck the government wants to do. And if they want to cut your payment, they'll cut it. So taking it early because I won't be affected because you think the word grandfather means something is a problem. Because I don't see it. I don't see it anywhere. So there are several scenarios where people will look at taking Social Security. I'm a single person. Say, for example, I can claim early. I have no one else that's going to depend on me for my decision. I don't have a lower earning spouse who didn't pay in as much as I did to Social Security, so I don't have to worry about these coordinated benefits. But should I? I have to look at my lifetime projected benefit and my reduction in benefit and what my projected lifetime benefit is going to be based on the decision I make. And a lot of planning software lump sums it so that you can see how much you're going to lose in monthly, but lifetime benefit. And many times it's hundreds of thousands of dollars. Because here's what Social Security is. It's longevity risk protection. It's not if you live as long as the tables say you're going to live and the break-even points that say you're going to get all your money out of Social Security. It's in case you live longer. And that is an issue because you know what? I have more people, Matt, that I talk to that know exactly when they're going to die.
They were born with an expiration date.
Yes. It's like it's printed on their forehead. And I'm like, how the heck do you know? And what if you don't die when you think you're going to die? What about if you live another 10 years beyond that? Could happen in today's times. We're going to continue this discussion when we get back. Stay tuned.
Step into the confusion. Can't you hear the sound that's in the air? It's rock and roll. 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 It's rock and roll.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
It's back. Get ready for our next live chat edition of Candid Coffee with Richard Rosso and John Penn, Saturday, June 29th. Anything you want to know, we'll find the answer.
What's going to happen to interest rates?
Should I put all my money in gold?
Has Lance been working out?
Register now and submit your probing questions for John and Rich at realinvestmentadvice.com.
How far will NVIDIA go?
What about Social Security?
Who does Mike Leibowitz's hair?
The live chat edition of Candid Coffee with Rosso and Penn. Register at realinvestmentadvice.com. Realinvestmentadvice.com.
Are those your pajamas?
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
The bets are on right now for the NVIDIA drinking game.
The Real Investment Show podcast.
Every time NVIDIA says the word AI, you have to take a shot.
Same show, your schedule.
By the time they get through the earnings call, half the country will be completely obliterated and it really won't matter what they say their earnings were, which will be just in time for the debates. Exactly.
At realinvestmentadvice.com.
That's a whole other drinking game right there.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access, like Technically Speaking Tuesday, Financial Fitness Friday, plus each day's radio shows. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So listen, tomorrow is our Candid Coffee, where we go back to our roots with a live chat episode.
You and John are doing that, right?
John Penn and I. Yes. Now, he looks more like Matt Damon than any of us. Got sort of that Ben Affleck kind of look to him. Except not as miserable being married to Jennifer, J-Lo, yeah.
Poor guy.
Yeah, he looks very downtrodden. I don't know. He got married and it's like, it's over, man. So tomorrow, this is a StreamYard webinar, June 29th, 8 a.m. before you start your day for an hour. We already have gotten so many questions from you. Interest rates, Social Security, gold, ask us anything. Is Lance working out? Yes, he is. Very buff. Very, very buff. Got to get prepared for his trip to overseas with the family. So he'll be all bronzed on the beach like James Bond Roberts. I'll take my chart shaken, not stirred. So he'll be there. I wonder who the new James Bond is going to be, Brent. That last movie almost killed me because I love Daniel Craig as James Bond. And the fact that James Bond dies killed me, and how he dies, having his daughter and all that. So that I thought it was a great story. I had to get the script, read through it. but who do you think is going to...
That was a very explosive ending.
It really was.
And I think they're going to shake things up, seriously.
Yeah.
I think there will be a
woman?
Jamie Bond.
Oh, a Jamie Bond.
A chick.
Wow.
You know, I just wish they'd go back to the old school cartoonish, villains and all of that sort of stuff.
Like,
that was all
man.
fun.
Yeah.
Goldfinger.
Dr. No.
Right.
Yeah.
Those were great villains. They were. I mean, such great films.
Mm-hmm.
So I know they're in the process of trying to figure out who it's going to be.
I nominate Maggie Q.
Maggie Q. Who is that? I don't even know who that is. How do I not know?
Richard.
I know. How dare you? I got to look her up. Now, okay, it is what it is, but yeah, James Bond, Lance Roberts Bond, you can't really tell them apart. So if you have them, it may be, ask the question, is Lance going to be the next James Bond? Ask it tomorrow. Join us. We'll go through why he should be.
It'll be Christina. Mrs. Bond.
I like that. I like that idea a lot. Trying to be polite. I do like that idea. So that would be a lot better than Lance, and we wouldn't even care about charts or anything. Just you better bring me back something from Greece. That's or wherever he's going, Italy or wherever the heck he's going. I come back. I'll go to a trip. I come back. I bring him something every time. You know what I get? Tumbleweed. Nothing. I get nothing when he goes. So we're talking about Social Security and your timing decision. Very, very important. So we're taking some of this information from a really good article, but just so we know, we got a couple now, George and Joan. And if you're George and you're 5 years apart, you have a younger spouse, and George is going to reach full retirement age of 66 and a half. Joan does at 67. Now I have a scenario where George makes a lot more money than Joan. And Joan is going to outlive him by at least 7 years, because that's just what happens. So George's full retirement benefit is $2,647. Joan's is $724. So think about this. You are going to affect, not like Lance. What are you getting? Nada. Nothing. Zip. He's right to the point. We always said Lance is right to the point. He's not even going to bring me an olive. Nothing. Not even Sleepy Joe hot sauce. I gave him. So, so if you are married and your spouse will have a very significant difference in Social Security claiming benefit. $724 compared to $2,647. You better consider that spouse who's going to outlive you, or he is going to come back and find a way to haunt you from the grave. So George files, say, for reduced benefit. Joan gets a reduced benefit. That's not a good approach. The best approach is George should do one thing if he cares about his spouse. Unless you need the money. Remember, all these scenarios are based on if you need the money, you need the money, man. We will work with you. You take it. You wait until 70, George. Because it's longevity risk. Because at 70, remember, from full retirement age to 70, you get a delayed retirement credit bump. You should all go to ssa.gov, create an account, look at your statement, look at the difference, and calculate it per month. But if you do what we do, and we calculate it over lifetimes of George and Joan, we're going to see a very big difference of the power of delaying Social Security. If I have a younger spouse who didn't pay in as much as I did, the gap is incredibly major. And you have to keep this in mind. It's not about you anymore. So there are so many times, and there was a study, Matt, that was done. Over 50% of men will make a claiming decision without their significant other and take it early.
Why do you think that is?
I think they feel like that's my Social Security. I'll take it early. I have all the narratives in my head. It's not going to be here. I got to break even.
Right.
But you're not considering the spouse who's younger than you.
Down the road.
So I have couples, people I work with, that have 30-year age differences, second marriages, with children. And one close to Social Security and one's 20 years away. And I said, I don't care. Well, if the Sharpe's law goes, what if the younger makes much more? Well, if the younger is going to pay much more in, I have couples that both make a lot of money. They've both maxed it out, and they both should wait until 70. I'm not concerned as much about the spousal benefit than my own. And it's a good point. You got to look at the difference in disparities, but there are couples that make a lot of money, both of them, right? Well, then you can just sort of say, what's your lifestyle? What's your health look like? And you don't have to couple maybe the decision as much. You both can wait until 70. I've had couples where, well, I'm going to go back to my scenario with younger spouse, but I have couples where one will say, listen, I'm going to take it at my full retirement age because my health isn't as good as my partner's. And my partner goes, well, my health is really great. I'm going to wait. And that works. That's absolutely fine. So what's happening now is how families have changed. So I work with a couple. He's 66. She's 36. She's had 2 children. And he's talking about Social Security. I said, I don't really care about your Social Security.
Wow.
It's not your decision anymore.
Right.
You have a stay-at-home spouse with 2 children who hasn't paid in anywhere near as much as you had. So guess what? I have to worry more about them. He sort of appreciated it. I mean, I didn't say it like Lance. You know what your Social Security is? Nothing. Zip. Nada. I didn't really have, I got a little bit more bedside matter than nada. Nothing. Zip. Although that could be effective at times when you're not really making the point. Right? And he got it. Because now I have to worry about survivor benefits and children's benefits, right? Young survivor benefits for those children until they reach the age of majority.
Sure. Hey, let me ask you, you mentioned earlier about delaying and there's a bump. What is that? That's generally what, 8% per year?
8% per year.
So, I mean, that's higher than any COLA that I've seen in the last 20 years, right? And
again, it's just based on longevity tables and so forth. It's not like, hey, I'm getting this 8% rate of return, but it is an 8% bump. Hey, who's this? So Andrew goes 66, 36, GOAT. Greatest of all time. Yeah, but who's the coach that's set? Belichick, who's 73, was 74, and his girlfriend's 24? That's the GOAT. That's the GOAT. Not. I'm like, what the heck is going on there?
Prescription drug prices probably went up.
Yeah, I do need a muzzle sharp law. I absolutely do. So the Social Security claiming decision really is important. And it will become more important depending on the age disparity, how much you paid in, how much you've earned through your lifetime, how much your spouse has earned through their lifetime. Very, very important. Work with someone who will run the analysis for you. And take the emotions out of it if you can. And if you do make an emotional decision, own up to it. And that's fine too. We'll be back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
It's back. Get ready for our next live chat edition of Candid Coffee with Richard Rosso and John Penn, Saturday, June 29th. Anything you want to know, we'll find the answer.
What's going to happen to interest rates?
Should I put all my money in gold?
Has Lance been working out?
Register now and submit your probing questions for John and Rich at realinvestmentadvice.com.
How far will NVIDIA go?
What about Social Security?
Who does Mike Leibowitz's hair?
The live chat edition of Candid Coffee with Rosso and Penn. Register at realinvestmentadvice.com. Realinvestmentadvice.com.
Are those your pajamas?
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So Peter on the chat asked a really great question about having unearned income in Social Security. Sorry, you need earned income to contribute. But if you're married to someone who's paid in, you absolutely could look to collect a spousal benefit.
Sure.
But you do need to contribute to the system to get paid. Yes, and you do need, if you start collecting at 62, you have 1 year to change your mind. Yes, you used to have an unlimited period to change your mind. And we would have clients pay it back to restart the clock. But the Social Security Administration took that away. So keep in mind. Check your health. If you won't make it to 80, start collecting at 62. Again, Larry knows when he's going to die. Everybody knows when they're going to die. The goal with Social Security is, what if you live? What if you live? I had one client that wanted to take it at 62 so he can go to Vegas and have fun with it. I'm like, I'd rather have it in case I live longer and I fall asleep in my Cheerios that someone pulls my head out. Okay? So keep that in mind. So keep this in mind. Tomorrow again, live chat, sign up. We've got a lot of people, but we can handle more. Send in your questions, realinvestmentadvice.com. We are going to tackle, oh my gosh, gold, mutual funds. I mean, we're all over the place. I like to know who does Mike Leibowitz's hair. Oh, his wife does. Floby. So 10... Just Floby. Sorry, Mike. I didn't mean to think your wife's using a Floby on you. You know, they still sell those damn things? Those Flobies?
I got to admit, I haven't gone to look for one recently. So.
I know, but I mean, I just saw it pop up on my feed one day. I'm like, what the? Yeah, recession, you're going to need to cut your own hair, dude. Keep that in mind. So if you're going to prepare for retirement, the one thing you have to remember is you're going to need to retire. They used to have these apps, Matt. Oldify, Aging Booth, Our Face, where, and Merrill Lynch would do this. They would actually put up a software. They would actually run your picture because people had a hard time visualizing what they would look like in retirement. And I think they traumatized a lot of people. But it does make sense because your mind believes what it sees.
It's like that Indiana Jones movie, right?
That's how I feel when I go outside. You mean when his face started falling? Yeah.
Right.
Yeah. You ever see that meme? Like August in Texas, and it's that dude with the melting face from Raiders of the Lost Ark? No, that was which one was that?
That was Lost Ark.
Was it Raiders?
Yeah,
okay.
I think so.
Yeah. So you got to visualize as best as possible what your lifestyle is going to look like. That's really important, right? And then you got to think about what your money roots are. How you save for retirement. Money script. Yeah, AI. James said, yeah, AI. You can probably do this aging technique through AI. They probably have, I'm sure they have programs. I like to put my baby picture in those. And then there's got this baby that looks like Churchill when it comes out at the end. It's pretty funny. So I took the Klontz money script, and we do have money script available too if you'd like to take it. You just let me know, send me your email address. So I came up with to have these dominant or higher levels of conviction in these categories. And I had scores of money avoidance was low at 1.5, money focus was medium at 3.5, but money vigilance was high. And you want your advisor to have money vigilance, right? Because I swear to God, this is a chat. I'm so involved in the chat, I can't do the show. There is like a whole bunch of questions and stuff that we could just do a show chat. It's fascinating this morning. There are going to be certain traits that you're going to have that are dominant and some that aren't based on a money script. Those are your subconscious. Like, do you remember anything in your childhood that cemented how you deal with money, Matt?
Oh, I don't know. I mean, I'm sure a lot of lessons, whether it was trying to sell lemonade or, raffle tickets for the church bazaar or whatever it was. I think little lessons can be taught all over the place. Mm-hmm. One of them that's always the hardest, I think, as you're growing up is that impulse stuff at the end of the checkout aisle. The mom has to bat you away from.
I noticed that area has shrunk a bit.
Yeah.
But when I was a kid, everything was at that checkout aisle. Remember?
Yeah. Well, I mean, I went to Dick's, and you have to go through this cattle chute just to check out of impulse items. I think at some of the sporting goods stores, they have like these longer aisles, and there's another store I can't remember. Not Hobby, maybe Hobby Lobby. I don't remember. But you go through and you're going through a myriad of rows to get to the checkout.
Oh, Micro Center.
Oh,
my
Micro
goodness.
Center, yeah.
Yeah. Especially if you're into geek stuff.
Because they have all that little stuff, like
Oh,
all the stuff, the
yeah.
little, yeah, it's crazy. But at the supermarket, I've noticed that some of it's limited, and I think it's to move the line along. Although now you check yourself out, you might as well have it.
Well, you just put it in the bag, right? I mean,
Yeah.
skip the checkout.
Skip the checkout. But knowing your money script, so I don't know, but I think, Matt, I might have sent you a link for this.
Yeah. I
Yeah,
took it.
you took it.
Yeah.
Do you remember what you did?
Not
How you-
offhand, but I can look it up. It's been a minute.
Yeah. It's very interesting what a money script shows you about your subconscious and what lessons you've learned. Especially when you had, say, I had Depression era grandparents who saved everything. And my dad was the totally opposite, just wanting to spend everything. So you do need to understand where do you fall in this spectrum. And some of the things or decisions you make, some of the things you do may just be subconscious, and you need to know what your money script is. Then you got to begin your financial planning step. 10 years. So people say, what's the right time? When should I do a financial plan? How long? Is there an optimum time before I retire? What do you think?
Well, I mean, I think it's never too early to start planning. At the same time, life changes so much. And what I like to term plans as, even if the person's in retirement, is they're exactly wrong.
Yes.
Right? Because by the time that data gets in there and by the time you crunch it all down, things have already started to change, whether that's your account values or even your goals. Looking at a projection when you're 20 to what's going to look like when you retire at 65, 70 may not be as impactful. But getting the conversation going is always a good thing. I think, probably at a minimum, if you want to retire at 70, 65, you should probably start looking at that, 10 years earlier, 12 years earlier, somewhere around there?
Yes. And I agree. I don't think there's any bad time. So keep in mind, James goes, what's the money script? The money script is really a way to dig into your money roots. Okay? It's subconscious negative money thoughts that change your habits without you even knowing it. So financial psychologists, Brad and Ted Klontz, created it. So these are unconscious, transgenerational beliefs about money.
I think I found mine if you want to put me on the couch.
Yeah. Give me some of your numbers.
Here.
And you could take it, James. If you want to take this money script test, you send me your email address. I could send it to you. Oh, let's see what you got here. Well,
I'm a little nervous now.
Well, this is your investor profile, which is just as good.
Oh, that's not the right
yeah.
one.
So
I'm sorry.
the money, that's okay. So you have money avoidance. Here are the 4 categories: money worship, money status, and money vigilance. Money avoiders, right, believe money is evil. Rich people are greedy. Worshippers believe more money will solve all their problems. Status seekers equate self-worth to net worth and place a premium on buying anything that's new and best. You know these people. They buy they're like these leaders. They buy everything up front without even checking it out. It's new, it's brand new, it's got it's got a label on it, I got to have it. The money vigilance, you're alert, watchful, and concerned about your financial health. Until you know your money script and your financial plan, your goals, and the actions you take to get to the goals, right? What are the steps? Retirement might be 40 years away, but you're telling me there are no other goals you have? Buying a house, having children, saving for college, whatever it is. You need to figure out, do I have the right habits to get to where I want to go? But do I have the right traits? What makes me tick from a money perspective?
It's like therapy for your pocketbook.
I always say we might be money managers and planners, but we are mostly psychologists. Especially when you have a couple walk in and I do money scripts for them, and one is totally, I'm like, how'd you two ever get together? You have to have some overlap in these 4, hopefully on the more positive traits. So keep that in mind. So the money script is important. You want to take it, you send me an email, I'll send you the link. But the plan is a good time. Anytime's a good time to at least start a plan. Just so you know you're saving enough. And where am I saving it? Roth, which we prefer over traditional IRA. So keep that in mind. That's all we got for today. We hope you have a great weekend. Chat was on fire. Fire. Even Lance, nada, nope, no, zilch. Major contributions today from Lance Roberts. We'll see you soon. Take care.